Hi, everyone. Thank you very much for joining us on the first joint live chat webinar between the Crypto Carry Club and the London Blockchain Foundation. So thanks also to Jana for helping to coordinate this. I'm very grateful to everyone who's joined, and to have such great debaters arguing to and fro and against CBDCs. So just for everyone who has joined, I'm Erica Stanford. I run the Crypto Carry Club. So we're the main, for all non-UK people, we're the main networking events for crypto and blockchain in the UK. We've got, well, until lockdown, we had live in-person networking events focused on crypto and blockchain in London, Bristol, Oxford, and some of the main tech hubs in the UK. Really fun events over lots of curry and lots of drinks, mostly invite-only events. Since lockdown, we've been doing a series of Crypto Curry live chats, and every Friday we have the Crypto Courier goes out. So it's a weekly newsletter that gives all the latest updates on what's actually happening in crypto and blockchain use cases and adoption. So everyone can go to www.cryptocurryclub.com to subscribe. Please do follow us, and thanks for joining us on our first joint live chat.
And thank you to everyone for joining as well, and to Erica for co-hosting this. My name's Jana, and I'm a director and the Regulatory and Policy Advocacy Ambassador for the London Blockchain Foundation. We are a members organisation open to individual membership, and we established ourselves in order to promote diversity of both thinking and people in the blockchain ecosystem. To bring together people from a wide range of backgrounds to share knowledge, collaborate and build networks. And we're looking forward to expanding our network to include some crypto carriers as well. So thanks very much for joining. And just to...
All right. Many thanks, Erica and Jana, for inviting me to moderate this exciting panel. My name is Nina Siedler. I'm partner at DWF, a global law firm. And also involved in a number of associations, maybe worth mentioning INATBA, the International Association for Trusted Blockchain Applications, which had been initiated from the European Commission last year, and where I'm part of the board of directors. I actually met Jana very recently on a panel moderated by Elizabeth Noble from the European Banking Authority. And during the pre-discussions of that panel, there had been much focus on CBDC, although the panel topic was different. And I'm really delighted, Jana, that you picked this up and created together with Erica our today's panel to really focus on this topic. Maybe some disclosures up front. I had been part of a group initiating a call for action with regard to CBDC, and I will post the link to this call to action in the channel. The same will I do with an article published by Schneider, one of our panelists, earlier this year, so that you can look it up if you're interested at a later stage. But let's go. Here they are in alphabetical order. Adi Ben Ari, I would like to welcome you to the panel. He is founder and CEO at Applied Blockchain, building enterprise software for the past 25 years, including at Lloyds Banking Group. Applied Blockchain develops blockchain solutions for clients like Shell, Toyota, Lloyds Register, and the United Nations. Welcome, Adi. Then we have Pietro Grassano, who is Business Solution Director Europe at Algorand, with a demonstrated history of working in the financial services industry, skilled in asset management, macroeconomics, mutual funds, trading, and structured finance. Welcome, Pietro.
Thank you.
We have Olaf Ransome in the panel, aka the banker's plumber. He helps banks and fintechs master their processing, optimizing control, capacity, and costs. Welcome, Olaf.
Thank you.
And then last but not least, Schneider, who is a financial services and technology lawyer with extensive experience in blockchain, which I can confirm. He is the general counsel at Block.One and co-hosts the Appetite for Disruption podcast with Troy Paradis and is the contributing editor for the Chambers and Partners FinTech Practice Guide. Welcome, Lee.
Thank you.
All right. In the prep call, I had nearly no chance to guide this discussion to any meaningful way. And Jana had asked to give me a chance as a moderator to do this. But hey, guys, I love spirited discussions. So let's rip and jump right into the discussion whenever you feel you need to contribute. First of all, let's start to clarify with what we would like to talk about. Olaf, you volunteered to give an overview of CBDC and the types we can and probably should differentiate.
Right. Thanks, Nina. The best place to start is something that came out very recently. The BIS put out a working paper, creatively titled Working Paper number 880, with a few authors, Auer, Corneli, and Frost. They came up with a definition that there are three types of CBDC: central bank digital currency. So the central bank part is quite important. One is direct, which basically means central bank does everything, creates the token or means of payment, and all the systems, does everything. The next one is a hybrid, one that says intermediaries do some things, but the central bank kind of replicates the whole structure. The third is indirect. Hybrid was the middle. The third is intermediated CBDC, where the central bank only maintains the wholesale ledger, which is not terribly different from maintaining reserves today. Now, there's a theoretical fourth variation on the theme, as it were, which is indirect or synthetic. I think the Bank of England has done everybody a favor recently and came up with the term RBDC, reserve-backed digital currency. The idea being that there's real money, reserve cash, not reserve any old assets, but reserve cash to back up this coin or token that's being issued. So I kind of like the fourth one. The fourth one's what Fnality are trying to do with a bunch of the whole banks. And I like the RBDC term. Very important as we think about CBDC in its widest form. What is it? You got to do three things to have one of them: issue it and redeem it, deal with all the relationships, including KYC, and all the technical connectivity. The relationship part is pretty important. Andrew Bailey, the governor of the Bank of England, or new governor of the Bank of England, talked about this recently at the Brookings Institute. He said, look, important to know where the claim is. It's important to know what supports conversion at par. And if you're going to do some significant things in somebody's currency, expect that they want to regulate, which is, I think, a nod and a wink to the folks at Libra, that if they want to do lots of payments in pounds, they should expect to get regulated. So that's a quick summary. I'll leave it at that and hand it back to Nina.
Okay, many thanks, Olaf. Yeah, so there's a variety of CBDCs, all of which have their specifics. But in our prep call, we actually decided to focus on one side of things, which we called retail CBDC, opposite to wholesale CBDC, which is more looking at the relationship between the banks and the central banks and how money is created on that level. Because we found that the retail part is currently rather uncared for in the public discussion. The public discussion seems to be dominated by the wholesale versions. Lee, you are a CBDC fan. So what do we need specifically retail CBDC for, in your opinion?
Well, I don't know that I would say that I'm necessarily a fan, but I like to think of myself as very practical. And I think from a practical standpoint, if you don't have a CBDC, it's going to be very difficult to help move the population of your country fully into the digital world. I think one of the things that blockchain has made clear is that there's not just a digital world for information, as we've seen with the internet and the web, but there's also a digital world for payments and for other unique digital assets. Actually, I should say digital items, because it runs the gamut of much more than just assets. And I guess It depends on what your definition of asset is. But we're seeing things like digital art already being created and using blockchain's uniqueness to be able to assure people that they're actually buying a unique piece of art. And so without a CBDC, my view is it's going to be very difficult to convince a majority of the population in the country to truly adopt this digital payments world. In fact, I don't think most people right now understand that the payments world that they live in is not as truly digital as it could be. And so my view is we need CBDC, we need the weight of governments convincing people that this is a good idea and that this is going to be something that they will be able to rely on.
Yeah, I think that's absolutely correct. I heard specifically out of the German industry who did a lot of POCs in the blockchain space. They said, you know, if the governments could take off the burden for us to convince our business partners to accept this digital money, then this would bring us a huge step forward, which is clearly, you know, something that e.g. Libra cannot create, right? Because Libra will nevertheless remain private money and no central bank money. Yeah, so understood.
Nina, that I'm sorry to interject. That point that you're making, I think, is a key point. And I don't know to what extent people have read or listened to Andrew Bailey's speech from last week at the Brookings Institution. If you haven't, I commend it to your reading list. You know, one of the distinctions that he made was between a CBDC and e-money and stablecoins. Mm-hmm. Now, stablecoin and e-money, I'm not sure there's that much difference there. And I was sort of struggling with the distinction that he was trying to make. You know, in the US, I can have my Starbucks card. I can put money on my Starbucks card. I can put money on my Starbucks app. I can spend that money at Starbucks. Starbucks is holding that money for me, but they're not doing it under color of regulation as a bank would or as a brokerage house would. And that's very similar to the way e-money service providers are doing it, but that's also very similar to the way that stablecoins are doing it. And actually, there are a lot of parallels between what's happening with stablecoins that are fully backed one for one with the underlying currency. And by the way, I should be clear, I'm talking about stablecoins that are currency linked as opposed to stablecoins that might be linked to some other, you know, basket of assets or something like that.
Interject there. That's I think there's a big difference between those stable coins that are one-to-one backed and those that are floating as well. And I think that might have been the distinction that they were talking about. Also referring back to Olaf's introduction, for me, one of the big exciting things here is the technology, right? And the promise of, let's say, efficiency and all the things that we could potentially do once we have true digital money. And when I think about that, I think, you know, who do we want creating those efficiencies and creating that technology? Look at how the pure crypto world has played out and the tremendous innovation that's happened there. And then you think back, you know, do we want the government, the central bank to be the one actually building the technology stack here? You know, how are we going to get to the place where we really have the economy making the most of this technology and really making the most of the potential efficiencies? And finally, on payments, I think there's always a big focus on consumer payments, especially with Facebook coming in here, and we see what's happened in Asia and in China and so on. But I think one of the real places where digital money is going to bring benefit is business to business, because business to business really isn't very digital right now. And so that's, I think, a big area that you know, this type of technology could really make a difference in.
I think those are all good points. I'm sorry, Nina.
No problem. That's all, I think, pretty clear and sounds convincing to me. But we have, on the other hand, also part of the panel being more critical. So what makes you, Pietro and Erica, for example, think that we should be rather careful with CBDCs?
Ladies first.
Okay, I think my fear about CBDCs is how much control it can potentially give. I mean, just using China as an example, with their DCP, the Digital Currency Electronic Payment Program that they're looking at rolling out very, very soon and have been working on. And maybe this is an extreme example, but we're seeing here a digital currency whereby a very centralized government can at any stage block payments and really has a lot of control over what transactions its citizens can do. And my worry with CBDCs is how much potential power and control that can give to the wrong government, to the wrong people in power. And I think it's you know, there's a lot of validity to having a fully digitalized currency, but you're only ever one election away from that power being potentially very misused. And there is the argument that so long as you've got potentially people who, yes, can hold cash, that gives them a degree of freedom. So yes, of course, you've got the argument that yes, it could be used for crime, or that could just be used by old people who don't want everything to be controlled, or potentially by people who vote in different ways or do different things other than what the government wants. So yes, that's an extreme example. But the more you read about how China are looking at using some of these powers, the more that's actually a very real scenario for a lot of people already. So that's my fear, just how it could be abused. And I'd be very...
I think those, I'm sorry to interject, Eric. I think those are legitimate fears, but I don't see those as necessarily an argument to say, well, we should never have a CBDC, because frankly, so much of what everybody does nowadays is subject to government monitoring that, you know, if that's your standard, then you should opt out pretty much entirely of the current banking system and just go full Bitcoin, and you'll be, you know, well, actually, I should say full Zcash or full Monero, so you have a privacy coin. But I do think those things are really important considerations. And I, for one, do not want to be living in a world where the government can see every transaction that I make. So I do think we need to come up with appropriate design elements to make sure that it's workable. And one of the great things about blockchain technology and the associated technologies like zero knowledge proof technologies, et cetera, is that you can design those things into your platform. So until quantum computers can just break all encryption, we need to take those design elements into consideration. But to my mind, that doesn't mean no CBDC. That just means a well-constructed, well-conceived, well-constructed CBDC.
And in that context, we also discussed, you know, thinking about CBDC also as a cash replacement, right? Which can be transferred peer-to-peer, you know, from one smartphone to the other without passing necessarily by the central bank as such. Yeah, obviously, you know, there must be some limits to that in order to comply with the anti-money laundering rules across the globe. But at least, you know, to a certain extent, that should be possible as well. Pietro.
Yes, I mean, my position is to be a bit cautious, not negative. I mean, it's not because of CBDC that we should fight governments which are actually too intrusive, right? And CBDC, if properly designed, could be an element of ability of the citizens to regain access to this fundamental piece of infrastructure. I'm a bit cautious because I see a lot of fashion around that. I see a lot of feeling that the CBDC starts to get a catch-all kind of phrase. And there is the risk of missing pieces around the design of all this. Of course, as Erika and Lee implied, there must be some sort of balance between, let me put it this way, the security elements that come from the privacy. Of course, I work for Algorand, which is founded by the inventor of zero knowledge proof, Professor Silvio Micari. So I absolutely convinced that security is a key element for adoption. At the same time, there is security that comes from know your client, from the compliance aspects that the financial industry has been creating with the regulators, with private agents throughout the time. And the balance of the two things seems to me a difficult thing to achieve, more than mentioning CBDC at a gala dinner. So I would say that this is essentially the thing that makes me a bit doubtful, a bit too much of hype around that. I mean, apart from us trying to look under the hood, some difficulties in trying to go to the details. Everybody talks, for instance, about atomic swaps, and 99% of them are not truly atomic, right? It's a hash time lock kind of procedure, which at the end of the day leaves the way to and the room to a denial of service attack. Is it the type of CBDC we want? Probably not.
So you would say, you know, we need like a minimum criteria list, requirements list for permitting CBDCs?
And we also should not, I mean, misunderstand the kind of mobile that we see from the citizenships. I mean, this is a piece of infrastructure, right? This is a piece of infrastructure that throughout the time probably became obsolete. The payment system today, the digital payment system, is based on technologies that were put in place at the end of the 80s, beginning of the 90s, with the limits of the technology that was available at that time. Today, of course, there is something else that is available. Real-time gross settlement is feasible today, batch net end of the day payments are still the rule for cross-border payments. Why? Because these rules were conceived at the end of the 80s, beginning of the 90s, where computational power and bandwidth were not strong enough. And of course, the status quo, the financial industry, even the regulators sometimes, are still relying on the set of rules that were created at that time. And it's not because they are evil, it's because there is a sort of legacy fatigue or friction coming from legacy. Change is a difficult kind of achievement. So yeah. My point is, let's look under the hood.
Okay. Okay. So can one of you come up with like a first set of minimum requirements which should be agreed in this context? Any idea?
Yeah, I mean, I can.
Okay.
Again, the parallel is roads, bridges, Roman roads, Roman bridges, railways, the internet, right? Pieces of infrastructure that gave value and are still giving value to all citizens. They tend to have some elements in common from a very top-down way, right? Efficiency, they must solve problems. Accessibility, inclusivity, openness. We can translate this in our world in terms of interoperability, probably. And then security, as we said, security from external attacks of all types, right? And this is true for railways, it's true for the payment system and CBDCs as well. So with these three main criteria, which of course needs to be detailed into scalability, cost efficiency, I don't know, programmability of money, this is the bucket of efficiency, then accessibility has to be inclusive and open, security needs to be cryptographic security, and then privacy, and then compliance at the same time, right? These are the criteria that personally I look to when I look at these kind of initiatives.
Pedro, it's interesting, allow me to interject, when you talk about infrastructure, thinking about internet and mobile, because it's probably got some similar pros and cons. So obviously we think about how we enjoy the open internet and the mobile access and all the applications and so on. On the other hand, the mobile companies operators were collecting the data and passing them on to intelligence services. And then of course we had, all of the data being, all of this being exposed. And you could argue, I mean, to Erica's point, that's kind of the balance here, is you have more power, which enables more efficiency, and it needs to be done, it needs to be executed in that, the government has to find that balance. On the other hand, even if they get it right, things change. So look how now with COVID, some governments are now accessing more mobile data and people's location and so on, and they just opened that up with a justification of tracking cases. So even if you lay the groundwork and you think you have a fair arrangement, it's very easy for these things to change. And as Erica alluded, you're one election away. Well, actually, you're also one incident away, maybe from an excuse to open things up and have access to this data or access to the controls. So
I think that's a really, really important point that you're making, Adi. It used to be that I used to, when I would debate with my friends about the privacy issues, I would say, everything can either be, well, we need it for national security purposes or we need it for financial crime purposes. Now we can add to that list, we need it for public health purposes. And that's not to say that I don't think public health reasons are legitimate and important, but to the extent we are giving away privacy, we just need to be cognizant of why we're doing it and when we're doing it and how we can recapture some of that privacy at a later date when the extreme need has dissipated. And look, I know I'm nominally on the pro CBDC side for purposes of this discussion, but one of the points that I wanted to make, and Andrew Bailey actually made it before I had the chance to make it today, was often these things are going to sit side by side. I personally think it's naive to believe that, a CBDC is going to come into play and then all of a sudden everything that's happening on blockchain or even everything that's happening in the currency-linked stablecoin world is going to suddenly become obsolete. That's 100% not the case. All of those stablecoins will continue to exist. Some of them may lose market share, some of them may gain market share, and it will probably depend on a wide variety of criteria and issues. But my personal belief and my personal hope is that all of these things are going to exist side by side, because the more different ways we have to accomplish the same thing, frankly, I believe that's more efficient, not less efficient. And I believe the redundancy is much more important from a security standpoint, from an interoperability standpoint, and some of the other items that Pietro mentioned. But it's also much better from a privacy standpoint, because as you pointed out, Adi, the government CBDC may not be as privacy conscious as the alternatives that are being done in the private sector. And we need that private sector innovation to push forward everything that's happening here. Frankly, it's probably the case that CBDCs would not be nearly as discussed as they are now if it hadn't been for the push in stablecoins, and in particular, our friends at Libra/Facebook making everybody shiver in their boots that they were going to take over the world, or whatever the worry was there. And so we see that happening. And that's really important. And frankly, that was one of the things, Andrew Bailey's speech, I hate to keep going back to it, but I thought it was actually quite good. But one of the points that he made was, innovation is great, but I would have loved for him also to say, innovation is great, and I really applaud all of the innovation that's been going on, because it's making me do my job better, right? Or it's making all central bankers do their job better. It's making all banks do their job better. It's driving new behaviors that are scaring some people, but we need those people who are going to push the boundaries and push the innovation to continue to move things forward.
Yeah, if I can jump in, I'd say, Lee, actually the Bank of England have across the board done actually a great job on encouraging the private sector and recognizing that they don't want to do everything. So if you go back to my opening comment that said there's 3 ingredients for a CBDC, create and destroy the thing, do all the KYC, do all the tech. They've been very front and central at the bank as saying, hey, 2 of those 3 things, just not in our DNA. We just don't want to do them. And in my last role, I was looking at wholesale CBDC, and just the prospect that the Bank of England would have to deal with 200 left hands of Credit Suisse and their legal entities was horrifying enough. You know, the idea that the Bank of England is going to deal with everybody and do their KYC, not going to happen. So I think they've accepted it and done that really sensibly. I also saw a suggestion, and one of the people on this call might remember which central bank it was, that suggested you could have some privacy, a privacy ceiling or a privacy voucher, whichever you wanted to call it, that said, hey, we'll let you have a retail CBDC. For the sake of argument, the first $200 a month, do what you, or 200 euros, 200 pounds, do what you want with them, send them anywhere you want. But after that, we'll want to have a bit less privacy. So I think there are ways of allowing for that.
There are also, just to interject, there are also a few central banks who are looking at hybrid models based on a combination of tokens and accounts. And I think China and Sweden are actually 2 of them, where the tokens can be used for peer-to-peer payments from wallet to wallet, for payments below a certain threshold, and then anything above that threshold would have to be account-based, so would be subject to a greater level of surveillance. But that's slightly more reflective of the current split between cash and bank account payments at the moment. I did want to ask a question though, which might be aimed more at Olaf, given you're the man who introduced me to the money tree and various other money diagrams, yeah. I think. Do you think, but it's for everyone really, we've talked a lot about stable coins and cryptocurrencies and how there are other things that can be used for payments as well. Do you think that there is potential, especially in the event that governments aren't very aware of the need to build in sufficient trust and privacy to their CBDCs, that there's potential that then actually other stable coins and cryptocurrencies will end up being used for the transactions that people want off the radar, and that will just end up being an ecosystem that's used for different purposes? And to what extent does this actually infringe on the monetary sovereignty of governments and central banks potentially? Ooh.
Well, I'll take a quick stab, as you did me first, and try and be quick. I think, yes, you can have a situation where you'd rather deal with anything but your own government. So, Venezuela, great case in point. First statement. Second statement, categorically, nobody will be building a big payment system that is a threat in any way, shape or form that isn't going to be regulated. Just look at Bailey's comments. He said, if you want to be a payment system in pounds, I'm in charge. He used some more subtle central banker-like words, but that's what he said. And that was a wink to the folks at Libra. Libra has gone out and said, Switzerland, we'd like to be a payment system. And Bailey's put up his hand and said, yeah, that's great, but you want to play around with my currency, you got to be a payment system, got to be regulated in my country. And I want to be 100% clear, if you say redemption at par, how are you going to achieve that? And so I think we can put some faith in the regulators here that in safe countries, the right things will happen, and we can just leave Venezuela and its trials and tribulations to one side. Enough said by me, I think.
But what do you say to, that's a question I heard from a banker here in Germany on a also recent discussion. They mentioned, we don't really care if, who will be the one issuing the first true CBDC, because we only need one wherever it is around the globe, because once we have that, we can simply hatch it to any other currency out there. And that was actually an argument raised to push a bit on the European efforts, which seem to be a bit slow, except maybe for Sweden. Because, if that is actually the case, then basically the whole world will be determined upon the Chinese CBDC soon, I guess, because they are obvious. It's obvious that they are a couple of steps ahead of anyone else, right?
So you're implying that everybody is going to trust the Chinese issuance of fiat yuan?
Well, only of yuan, and then the conversion can be done on the banking level, right, to whatever currency they need.
The value will be debased at the will of the Chinese People's Republic.
Yeah, exactly.
Sorry.
No.
Nina, I actually think that's that's a somewhat naive question by the German regulator, for the reasons that Pietro just outlined, but also for the simpler reason that it's still thinking about the euro as existing only in the Eurozone. And what we see in the digital world is it doesn't matter geographically where you are. Look, it's fine if you want your currency not to be in the digital world. That's a choice you can make. I think that would be an incredibly naive choice. And frankly, I applaud, following on Olaf's comments about the UK and the Bank of England and how forward-looking they've been. I applaud that, and I frankly wish that my own government and central bank here in the US would be a little bit more forward-looking. But, I think there's this naive view that, everybody's always going to trade everything in dollars, ha, ha, ha. And
checks in the postly.
Yeah, well, right, precisely. We look at our payment system here. I look at our payment system here in the U.S. I'm like, we can't even keep up with Europe, much less Kenya. It's really, to my mind, it's just really naive to be thinking that way about the digital world. And I'm not one of these people who believes that all national borders are going to fall and we're going to have one global whatever, blah, blah, blah. But if you're not prepared to have your currency in the digital world, your population is going to suffer and your currency is going to suffer.
Yeah, we'll get in trouble. Adi, you want to mention something?
I think there's a question about what's behind the digital currency. But for me, there's another question, which is what can you do with it? Right? Because the fact that it's digital money, well, I already have my mobile banking app and I can transfer money through my mobile bank and so on. And of course, in China, we have all the WeChat and so forth. So what's the point here with blockchain and why is this going to be any different? And for me, it's about the applications and the ability to integrate money transactions directly into software, into applications. And I think that's what the cryptocurrency world opened up, was the fact that you could create these smart contracts and you could create these workflows of business and consumers and so on and have them all digitized and actually moving money around directly within those applications. And so that's what I would look for in this digital currency that emerges. Because I think about the applications that we're all developing on blockchain, a lot of them have kind of hit a barrier. You can only go so far with a blockchain application without being able to move money. And so most of the blockchain applications we have in the business world are focused on business process because they can't go much further. Once you can integrate money into these blockchain applications, they become a lot more interesting. They can add a lot more efficiency. That's when you really kind of get this potential transformative power of the technology. And so whatever it is that comes out of these central bank initiatives, it has to support that.
Okay, I'm seeing a question which I would like to pick up from the audience regarding Lee's point about coexisting. Note BOE paper on CBDC specifically wanted to control that it didn't completely take over. So I read, that in a way that the BOE indicated in their paper that it doesn't intend to completely take over the control.
Yeah, I think that was the point that, I'm sorry, Olaf.
Oh, go ahead. That was exactly the point that I mentioned, that they've been really clear to say, yep, we know what the ingredients are for this ecosystem to work, and two of the three things we wouldn't be very good at, so we don't want to do it. Which is, again, as Lee then comes on, the Bank of England being very open about saying, yeah, here's this thing, we'll let it bloom. It's not to the exclusion of their existing RTGS system for payments. It's at the moment additive. You know, it should be a new thing they allow. So I think that's just another positive sign from the folks at the Bank of England.
And that's presumably also another approach than we see from the Chinese development of their CBDC. I would expect, at least. I'm not sure. I'm not aware of details here, but I would expect them to prevent their CBDC from leaving their system and floating around, so that it's always under their control.
As I've understood it, you can't have a wallet to hold their CBDC unless you've got an account at a Chinese bank.
Yeah.
So there's some
that
kind of
answers the
coupling.
question.
Pietro?
If this wasn't the case, actually the plumbering of the yuan to dollar and other currencies kind of exchanges would be completely, massively modified, right? With all the consequences in terms of relative prices of goods and services coming from China to other countries. I mean, they would shoot themselves in the foot immediately.
Yeah,
right.
That's right.
So,
their currency would then effectively float freely.
So there is a real world out there, right? And we need to keep
presumably we will see, you know, a variety of CBDCs coming up with all having their own features, right? And maybe finding, you know, their specific business cases, use cases.
Like it is the case for currencies, right? I mean, it's exactly more or less the same kind of situation. These are institutions. The currencies are institutions. People accept them because they are legal tender, right?
Because they are forced to accept it, right?
Yeah,
so legal tender, you have no choice. You must accept it.
I mean, I can decide to settle your debt with me with, I don't know, shells, like in prehistory, right? If we agree, okay, fine, we are done. This is not happening, though, because there is something that is called the state that has been created through the millennia with its own legitimacy, with its own failures, shortcomings, and added value. And CBDC is a piece of infrastructure that can be a piece of public good with a private sector intervention. And it would follow this kind of path, in my humble opinion. It's not going to change per se the fact that this remains an institutional kind of dialogue, right? As who was it? Harari, right? That mentioned institutions like intersubjective imaginary realities, right?
Well, it is.
This is
in fact
reality, like a state, like a company.
Can I ask the other panelists, if Facebook and Libra, you know, complied with what the Bank of England is alluding to here, right, and played with the regulators, would that be a good thing? Like, could Libra then take off, and would that be a good thing for the world?
I think it could be a good thing in some parts. When they first got started, I looked at what they were trying to do, and I thought, this might help the remittances business, the cross-border business, which is a useful thing. That's helpful in some regards. For some merchants, it may be cheaper and more effective to be paid in a Libra pound or a Libra Swiss franc or a Libra euro, rather than pay interchange fees to the credit card companies. So I think in both those cases, a Libra properly constructed would be an enabler, albeit the holders of Libra just have to understand what's behind it. It's not the same as a £5 note that says, I promise to pay the bearer on demand.
Yeah, no, that's absolutely right. I fear we need come to an end. It will be no final end, as I think Erica and Jana might further explain, so we can remain in this room for a bit longer. And I would just briefly use the opportunity. Olaf, you had a nice closing comment when we had our pre-discussion here. If you don't remember, I can cite you.
Why don't you prompt me?
Yeah, you basically said, there is no need to fear CBDC. Same risk and same rules. If we apply that, it'll all be fine. It will maybe slow down a bit innovation, but world will not crash.
Yes, there's a third element to that. So same business, same risks, same rules. And I think actually, I think it was Lee that made the comment that earlier that Lee or Pietro, that the whole Libra thing has forced our central bank friends to be a bit more active, a bit more vocal. They are actually largely singing from the same hymn sheet. So the collective of central bankers, as much as that might be a horrible prospect, but the collective of central bankers is the G20, as well as the BIS in London and the FSB, the Financial Stability Board. They recently put out a paper and they were absolutely clear on what the standards are for these systems. So I think if you're a retail customer, you should have some faith that whatever comes out the other end of the sausage factory will be in the right in the right structure relative to the regulations. And if you're a business that wants to get into that payment space, like a Libra, you've been told exactly what the conditions are. So you shouldn't think that you're going to work around it. And I'd add, there's plenty of history to show what happens if you think you're going to get around the payment systems. I know Erica brought up the whole privacy thing. Governments do flex their muscles even with the current system. And at least twice in my working memory, the Americans have beaten up on SWIFT to get a whole load of data that they want about customers, or to say to the participants in SWIFT, you lot are either going to close down doing business with certain banks in certain countries, or we're going to go seize all your assets in the US. So go ahead and make my day. So we know about this stuff.
Yeah. Yeah, it already happens. It will not only be introduced by CBDCs in the future. That's right.
It's ever the opposite, right? So a decentralized infrastructure like blockchain allows much more control on the controller. So if ever, it's the opposite. But the design must be very careful. I mean, money, at least wholesale money, is already digital, but centralized. So what?
Good point. All right. Then, Jana, do you want to explain again how we actually want to conclude and open up the panel to further discussions? There are also a number of questions still in our question tool, which we could pick up.
Yeah, sure. So if anyone would like to join the panel on stage, as it were, and have a chat with them in front of the live audience, then just notify us in the chat, and Erica will look you up and add you onto the stage.
Yeah, and then
so any questions? Yeah, any questions you want to direct to them directly?
You can ask your questions yourself. I can maybe let's see if I can pick up. The first one which arrived was actually, I'm interested to know the panel's views on how the CBDC might evolve to a full service means of settlement. I think we partly discussed that already, but if somebody would like to answer.
If the question, go ahead, Lee, you take it.
No, I was just going to say I'm happy to take a crack at it. So it depends on the infrastructure that gets built. So let's take Bitcoin and Ethereum as two examples. Bitcoin is a fairly brittle infrastructure that doesn't allow lots to be built on top of it. Ethereum is fairly flexible in that you can build a lot on top of it. So if you build your CBDC infrastructure more like Ethereum so that it can support smart contracts, then you could see a world where you could have different smart contracts built on this foundational protocol that would allow for settlement of other financial instruments, or really settlement of anything that is digital.
This was my point earlier as well. And I think, by the way, I think Facebook is kind of alluding to this. An interesting thing with Facebook is thinking about how when they first launched their platform, they opened up APIs and allowed application developers to build on top of Facebook. Imagine if they do the same thing now with Libra through smart contracts, and think about people developing applications on top of a token that's in WhatsApp. That's really what they're proposing.
Yep.
And personally, I think that's what a central bank digital currency should do. That's part of the interoperability in my mind that Pietro was talking about earlier, and Adi, I think you had also mentioned that earlier, right? If you're creating a CBDC, it may as well really be interoperable and programmable so that it can be used in lots of different settings and lots of different ways.
And would you see a risk that SWIFT or RTGS Global will address the B2B needs and thereby maybe prevent a real need for crypto to exist or to come up?
No, those
How
are two
strong do
different
you
things.
see?
Very, very different things. So SWIFT is not in the payments business. They're in the messaging business. That's all they do. They get an envelope and they move it. And like the transporter with Jason Statham, they don't look inside. That's the SWIFT business. Don't look inside the envelope. RTGS Global are trying to make a slight improvement on the current infrastructure, but the current infrastructure relies on, in wholesale, relies on intermediaries. It's the Chinese account thing we talked about earlier, but in a much more structured fashion. All of that intermediary business is extremely strained. So the BIS at the weekend put out a report that said, hey, correspondent banking availability is going down and demand is going up. And the reason for it is that the current method that says you have to do your commercial and retail business through a bank who is in country creates a whole bunch of credit situations, which as time has gone by have become increasingly unattractive. So RTGS Global will make a slight improvement on the status quo, but to make a big improvement on the status quo, we need a whole new process. You know, we need to disrupt the process, not fiddle with the bloody thing.
And you're not expecting like the current players to jump on that need. That was basically the question. Do we expect some movement from the existing like old world players?
I can point to my experience working with Fnality. There's 14 global banks and NASDAQ involved in that. They understand that the future is going to look different. If you go and talk to a treasurer today and you say, hey, treasurer, would you rather keep having overdrafts with your correspondent banks, or would you rather swap what you have in your home currency for what you need in the foreign currency? Treasurers all day long will say, please create me a situation where I can swap currency instantly. I would so much rather do that than have the current setup.
I think we've got a couple of audience members who have popped in to ask their own questions or make comments. So Bob, you joined first.
Hello, yes, my good old friend Olaf there.
Afternoon.
Yeah. So I think there are a couple of things that really interest me. One is that currency itself doesn't really achieve settlement. Settlement is only really achieved when you show on your accounts that you've got settlement. And Olaf and I have spent a long time around this whole question of real-time settlement. Traditionally, like my bank, for example, doesn't give me credit for the funds that I send them at 2 o'clock in the afternoon until 11 o'clock tonight, as they're in Singapore and they wait for the MT 950 to get there, and then they sort of use that to then drive their accounting process, which then sort of credits the funds, and then tomorrow morning I have to wake up at 4 o'clock in the morning to sell the sterling and to buy the dollars, so that I can then make my payments tomorrow morning in Singapore. So that's the sort of the current process and how that slows down. I can't see how a CBDC would attack that process, or indeed resolve it. The other thing, which I think Adi quite rightly alluded to, is that a lot of the corporates, have these sort of internal processes for looking at cash, and the problem that you face is that there isn't yet a wallet which can be used for a corporate. Because it's typically the corporate, you've got sort of a couple of thousand people who are interacting with the accounting systems. and have different levels of authority and everything like that. So it's not a peer-to-peer type of process. But until you get those corporates onto it, you're not going to have a lot of customers sort of interacting. And that's more an observation than a question.
Oh, okay.
If I may, on the last one, think of multi-signature wallets with different kind of role-based accesses and therefore role-based controls. The infrastructure allows you to take care of corporate wallets.
Yeah, I think the question is, Pietro, how do you get adoption of those things? Because many of them got multiple ERP systems and multiple sort of service centers and everything else.
One way to me is the legal tender logic, right? So it's not just that a transaction is settled when it's settled in your books. Actually, a transaction is settled when it passes through legal tender. It has to be, otherwise this would not be legal tender. So the old fiat money system cannot exist without legal tender, because legal tender allows global unconditional settlement.
It's a little bit more complex than that. Actually, what you need is settlement finality, because you don't actually pay bills with £5 notes. You pay bills and make payments through systems that are authorized under the local settlement finality acts.
You're right. What I wanted to say is that with the CBDC, you actually can achieve that via, because it's a legal tender, right? Therefore, in that way, if the regulator wants, it can allow this logic of adoption to happen. The logic of asking for a CBDC is exactly to make those business models that are conceivable today in theory being settled in practice through that new form of legal tender.
Just very conscious we only have a couple of minutes left, and perhaps Jeremy would like to question or raise a question or make a comment before we dive into the murky world of settlement finality and all that it entails. So Jeremy.
Yeah, thanks very much indeed. Yeah, can you hear me?
Yes, we can.
Yeah, brilliant. What an excellent session. Really interesting, with some fundamental points coming through. I wonder if I could just go to the other end of finality and settlement, up to the world of realpolitik, because it does seem to me that what we have here under construction, of course, is I would term it, I think, a new form of money. Now, any new form of money is going to take decades to introduce for all the reasons that have been articulated here. You have to have universal acceptance, systems have to be able to accommodate them. But what I suspect is going to happen is that, and I think you alluded to it earlier on, Nina, is that there are some nations, some jurisdictions who have grasped the significance of this and are really driving it forward hard. Mm-hmm. Those who have the greatest influence and power will be the ones who will be able to set the standards. And Andrew Bailey's paper, if I read it correctly, makes the point that the G7 and the FSB are going to be looking at those standards for universality. And I think I'm sure right in saying China is part of the G7. China, knowing that its position in the world over the next 2 to 3 decades as a dominant economic power is likely to be consolidated, not definitely, but likely to be consolidated, will require and insist upon a level of standards which meet their own needs and bluntly help to advance and enhance their own interests globally as a trading power. So there is that dimension, which I think is going to be a significant component of this as we move forward. Now, I don't know what anybody else feels about that or whether there's room to comment, but I don't think we should forget that. The more it becomes established, the more this will become a serious geopolitical game.
It already is. I mean, I remember distinctly in 2007, so before 2008, the vice chairman of the Chinese central bank asking for the redesign of the special drawing rights system on the basis that now China is in the WTO and it is a big nation and so on and so forth. So it's already happening. Is technology not a level playing field as of today between Western nations, Eastern nations? emerging markets or sinking markets. I don't know how to define them. Well, maybe not, because most of this technology is an open source technology. The ability to conceive that this architecture and design is probably not a level playing field. This goes to the ability of our political class to conceive the challenges for the future.
If I could make an observation, it's a lot of the work in China, I've been working with one of the big Chinese universities on this for about 4 years now. It's about sort of developing a Chinese standard. And yeah, it's interesting when you look at WeChat and when you look at sort of Alipay and so on, they've tended to stick to looking after Chinese citizens abroad, as well as Chinese companies abroad. Very little sort of their work has been about acquiring business away from, Western institutions. And that's largely because the central bank has driven in that direction. So so my interpretation is that lots of what they're doing is really more defensive than offensive. They really sort of were shocked when they lost about $2 trillion in reserves a couple of years ago, from as a result of sort of trying to open up the RMB to the world economy, and then having to retrench from that, and that's has really sort of stunted their appetite for sort of significant growth.
Yes, but they will accept that this is a long game. I mean, I think of all nations, just like, if you like, when the British was extending its empire globally, it understood that was a long game. And indeed, when you look at the money that it particularly espoused and promoted, I think the Bills of Exchange Act, which was the thing that really cemented the transfer from bullion to paper money, that was a British act, and that was in the early 1830s. Now, that was at a time when the British were really beginning to understand the potential power that they had commercially across the world as a trading empire. My suspicions are that China understands that and sees that. And to be clear, I don't think there's a hostile component to this. This is simply the Chinese saying, we are going to become a major trading power, and we want to give all those trading with us as much facility to deal with us as we possibly can. But the point you've just made is a true one at the moment. They just got to make sure that things are working okay for their own sort of direct interests and for their own citizens.
Yeah.
But,
we talked about infrastructure. So you can look at the Belt and Road Initiative as physical infrastructure, but think of this as something that will be extended, in that way.
Correct, Daddy. Correct. I agree with you.
I think this geopolitical stuff is super important, and I don't pretend to understand it particularly well. I do want to address something else that you said, Jeremy, in your comments about developing standards here, and I think several other people have mentioned that, and it was part of Andrew Bailey's speech. And I just want to remind everybody that, like, a lot of the stuff that's already happening is already happening in the digital world, right? What we're just talking about here is a new technology or a new, methodology in the digital world for doing this. So, one of the things I like to joke about is my favorite stable coin is my bank account, which is very much a stable coin, right? Anybody who knows how bank accounts work know that it's the same thing as a stable coin. Now, maybe there's all this regulatory structure around it, and maybe that's different for some reasons, but at its heart, a bank is taking my money and telling me they're going to give it back to me, and we know that they're probably only keeping about 10 to 15% of it, quote unquote, in their vault, which they're not even keeping it in their vault. It's the records at the Federal Reserve Board, right, in the US. Already in this digital world, when we talk about developing new standards here, what we're talking about is standards for a particular technology that recognizes the fact that the things you can do with this technology because of digital uniqueness that it creates allow us to step forward in the digital world. So let's not lose the point that people have spent years and years and years agreeing on different standards, and those standards have changed, and as new players have come in and introduced new ideas, more standards are developed. and standards for interoperability so that I can sit in the US and execute a securities trade in Europe or some other electronic marketplace because of the fixed protocol, et cetera, et cetera. All of that stuff is going to continue to happen. And now people are trying to build that up in the blockchain infrastructure world, as opposed to in the existing digital world.
So I'm going to just hand over to Nia for some closing remarks. And
thank you very much. Thank you very much to the panelists for all your contributions. And if you want to continue discussing something with anyone of us, reach out. Thank you very much, Jana and Erica, for organizing this and bringing this group together. It had been great fun. Thank you very much.
Thank you for joining us, and thank you to all the wonderful panelists and for all of the questions. Thank you very much.
Thank you, everyone.
Good night.
Have a good evening. Bye.
Bye.
Bye.